Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Omniacs, did we knock them dead or what on Wednesday? Technical analysis, baby. I don't care who's out there saying technical analysis doesn't work. We nailed the lows and rode them almost all the way to the highs based purely on technical analysis in the S&Ps yesterday. And for 4/17/08 Thursday, we got a green Omni again in the S&P, and we're looking for NASDAQ to go higher. Traders, I will say this, you know I have been in bear mode, and I have talked about don't fall in love with the upside time and time again. But you can't deny when the setup is there for an up move, you have to go with it. And you know us here at the Omni Trading Academy, we are very nimble and we're very proactive. And if the market changes and we got to get long, we flip and get long. But I am still not falling in love with the upside. I am just trading what it's giving us to trade on a Thursday. So we do have a green Omni, but before that, traders, we have a couple of charts. I want to show you a couple of things. I want to show you the argument that the bulls have and why yesterday and most likely today, the market will rally. So you'll get a two-day rally, Wednesday, Thursday rally. I want to show you what the technical analysts out there are looking at, why they're so happy about the upside, and we'll see what we're going to get out of it. I think you'll see what I'm talking about here. There's a couple of reasons for us to want to get long. You'll see it in the charts. So with no further ado, let's go to the charts, traders, and let me show you what's going on out there. Okay, traders, the first chart I'm going to show you is the mini NASDAQ daily bar chart. I have mentioned that we have been in a pinnacle area in the indices markets for a little while now, and we are still hovering around that pinnacle area. And look, we are right back to the Omni's proprietary moving average. It is right there kissing it. As we're doing the video this evening, it is touching it. As well as you can see this pretty well-defined channel. The market is just touching that channel. And a lot of indicators are bullish, calling for another day's rally. So the likelihood is we will take out this little resistance area, get above the proprietary moving average, and have an up day, and that's what we're looking for, an up day here. So let's take a look, traders. Do your own homework. You can see this is getting a little bit rounded. You never know. I would love to see a bottom come in because I would love to become bullish again. But until the bottom is formed, I am going to trade what I see and not what I hope for. Let's go look at a couple of more charts. I think you'll find them interesting. Okay, traders, the next chart you're looking at is the Dow Jones Industrial Average Cash Chart, the daily bar chart. Now look at this, traders. There was a head and shoulders formation, which is a bearish head and shoulders formation because the head is above the shoulders. That makes it an upright head and shoulders, and the market had a serious break. Now we've spent a lot of time after the break moving sideways, and look what's forming here. You are getting the head and shoulders inverted formation that I've mentioned a couple of videos back that's not fully formed yet but is on its way. Well, it's almost done. It's almost completed, and that would be a bullish signal. Now, we are butting right up to this Omni proprietary moving average once again. In fact, we settled just above it in the Dow on Wednesday. So for Thursday, there should be some buying power. Remember, traders, we have not taken out this major trend line that goes across the highs. From the high of the stock market until we broke, we have highs touching here, and we may run up there and touch that line in the 1290, 1320 area, somewhere around there. But I don't know that we'll get that high. I will say this. The inverted head and shoulders, which would normally be a continuation or bullish pattern in a bullish market, does not always work so well in a bearish market. And that's what we've had in the indices. They've been bearish. So an inverted head and shoulders does not always work well in a bearish market. Keep that in mind. You may get a rally out of it, but again, I don't think a bullish head and shoulders takes you out of a bearish market. It generally gives you a pop and back down we go. Let's look at another chart now, traders. Okay, the next chart you're looking at is the June S&P daily bar, the SPM8. Traders, once again, I am illustrating how you have the head and shoulders formation here. That knocked us down. Now we do have that inverted head and shoulders here. On top of that, we have a bull flag that we broke out of on Wednesday. We had a Wednesday buy recommendation. It worked out very well. And we broke out of that bull flag right there. This is the day that it broke out. And we butted right up into the Omni proprietary average once again in another indice. Will it get above? That's the question. The indicators are set up for it to get above. But look at this again. You have the inverted head and shoulders. And traders, I would love to say that's a very bullish pattern, but it only is if you are already in a bull market. It's not such a bullish pattern when you are in a bearish market. But nonetheless, the indicators and the setup is calling for a bullish Thursday. So we are trading from the long side. Now I want you to pay attention to the next chart, because you see what this looks like. Head and shoulders here, then a drop, then an inverted head and shoulders. Well, wait till you see the next chart, traders. I wonder how many of you realize that there's another chart that mimics the S&P and it's not an indice. Let's look at the next chart. Okay, traders, the next chart you have before your eyes now is the British Pound June daily bar, the cable, better known to you all the traders out there. And look at this. In a head and shoulders market, knocks us all the way down. We have that big down move, and it throws in an inverted head and shoulders. And it looks very much like the S&P market does. And what happened was the inverted head and shoulders gave us a bit of a goose, and then the market came back down again. It did not take us out of the bear. So if we have an inverted head and shoulders and we get a rally, it generally needs to be sold in a bearish market. Here's an inverted head and shoulders looking very much like the S&P chart, although this is the British pound chart. Here was the upright head and shoulders looking very much like it does on the S&P as well. So there is a chance you can follow in suit and get a rally, but a short-lived rally, because look what's happened. We've come all the way back down again. So again, statistically, the inverted head and shoulders formation does not work as well in a bearish market as it would be working in a bullish market. Take a look at your British pound charts, traders. Look at your indice charts. Look at the indicators. Do your homework and make sure that you see the same picture I'm showing you here. So, traders, you've seen the charts. You see what that looks like? The head and shoulders above knocked us down. Now you got that little inverted head and shoulders. Well, you know what? What I didn't show you is inside the right shoulder of that little inverted head and shoulders is another head and shoulders that would be pointing down. I will show that to you as this week progresses or in the weekend webinar. But there is not a great reason to fall in love with the upside. However, there is certainly reason to go green on me tomorrow, baby. And that's what we're doing. Again, tomorrow, Thursday, 4/17/08. We got a green Omni in the S&P traders. The Omni says to buy in the low 1360s. Currently trading 1367.5. So get your orders in. Buying them in the low 1360s. Traders, make sure you place a stop and place your stops first. Put your stop in a sensible place, somewhere where you can sleep at night. However, you got to use a little bit of a thick stop here. We're going to have volatility tomorrow. So you're going to buy it in the 60s. If you don't know exactly where to buy it or where to place your stops or where you'd want to get out, come on down to the Omni Trading Academy. It's www.livewithoscar.com, and we will help you figure that out. It is what we do here, traders. We teach traders from all over the world how to get this analysis right. And if you've been following these videos, we've shown you many times that we do know how to look at the analysis correctly. So come on down and learn this for yourselves. All right, babies. 1360s we're buying. The Omni profit objective is the mid to high 1380s. The mid to high 1380s. We bought them yesterday at 1340.5 and rode them all the way up to 1356.5. Now we're looking to buy them in the 1360s and ride them into the 1380s. Now I will tell you this, there is some resistance expected around 1377. And if the bulls really get this on the run and goose it tomorrow, you can see something like the 1400 area. You never know. Again, don't fall in love with the upside. Just trade a bull day for a bull day and then get ready to defend, because that might be the scenario. But for now, we're bullish. Again, buy them in the 60s. Look for them to get up into the 80s or be out MOC, and expect some resistance as you run into the mid to high 1370s. Traders, we want the NASDAQ to go with it, and we think it will. So let's see what we get. All right, traders, I hope you like the analysis I'm showing you, and I hope you do your own homework. If you do homework, send it to me at oscar@futuresanalysts.com. Shoot me the emails. I will evaluate your homework and write back to you and tell you what I think of your analysis. Traders, we now have 301 videos. 301, baby. 301 videos. A lot like this one that you're watching now, with a lot of techniques that we've put out there to teach the Omniacs around the world and the traders around the world who need help, because we are here to help you, traders. So come to the YouTube spot and watch some of these videos. YouTube.com/futuresanalysts is the address that you would go to. When you get there, subscribe to the videos and leave your comments, traders. I love the commentating on my videos lately. Every video's got 10, 12 comments lately, and I always answer those comments as well as other people interact with us. So it's a great way for you to tell us what you think if you're not at the site, if you're just using YouTube videos, and for us to get back to you. So go to the YouTube spot, subscribe, and check out our videos. Traders, don't trade alone. We have a crowd of Omniacs that do this every day together in unison, and it's really helping. You can't imagine the feedback letters that I get every day. I get letters constantly, and people are just talking about how we have changed their lives and their outlook of trading and taught them how to keep emotions out, and they absolutely believe in the technical analysis, and they're learning how to get this right. Traders, we are here to help you get it right, but you got to show up. You got to come to class every day. It's the only way we can teach you. Come on down to the site, www.livewithoscar.com. Grab yourselves a gold membership or higher and come to class every day. The classes are fantastic. The feedback on those classes blows me away, so I know we're at least getting our point across, and we're teaching it in a way where traders can understand it. Whether you are a novice or a professional, you will like the analysis that we teach, and you will be able to understand it. It's clear and concise. So come on down and become a student of the Omni Trading Academy. Most of the students are doing so well. I am so proud of you, Omniacs. You know who I'm talking to out there. Keep it up, Omniacs, and keep staying in tune with me, and keep staying up late at night, because I know that helps. All right, traders, give me a buzz anytime you want, 702-629-4755. Two things I want to mention. Send your videos in. Send your stops or in, emotions or out videos. We're collecting them, traders. The videos are fantastic. They're funny. We're going to put a compilation together. And without you Omniacs sending them in, we're never going to get this done. And you have been sending them in, but we want more, so keep them coming. Come on, send those videos in. All right, traders, we have the Mandalay Bay. We're doing a show at the Mandalay Bay, May 12th, 13th, 14th, and 15th. I have a speaking appearance on the 14th for an hour and a half. I have the main stage and exhibit hall. So come on down to the Mandalay Bay. Book your plane tickets now and get your butts to Vegas for the show. Come on out, Omniacs. You know what I'm talking to out there. Come on down to the show. We will do some extra things for you, Omniacs. If you show up, we'll give you some spare time. We'll give you some special time together, and you can meet the entire crew and hang out with us. We are going to run the show that we run every day with the cameras and the microphones on us from the booth all day long. So come on down to the show and check us out and see how we do this live. You'll learn lots by hanging around us. All right, that's about it. I know we got the radio show. We'll talk about that in tomorrow's video. The radio show is every Friday from 9 to 11, so tune in. And I'm about to tune out, traders. I'm out of here. Remember to say this to yourselves every day, every morning, every afternoon, every evening. Helps keep the emotions out of trading, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.